This is Tom Aspray with the Viper Report Market Wrap video for the week ending September 5th. Well, the jobs report had everyone hanging on the tape just before 8:30 on Friday, and it didn't disappoint. The weaker than expected number really gave the bulls a boost and likely frightened many of those who were short the market. You can see this hourly chart of the futures, sharp move to the upside. We got up to, well, this is not the futures. Hang on for a sec. That's the triple leveraged S&P. Similar chart though. This is an hourly chart of the futures. Little weakness heading into the number, reversed sharply to the upside. We had a range of 65.35 down to 65.02, closed at 65.35. Next hour was up and then reversed sharply, in the first full hour of trading. And you can see we edged back. These purple lines, we made it back above the pivot, so that's encouraging. And next week's pivot here is 64.67. So that'll be a level to watch, in terms of who's winning the tug of war between the bulls and the bears. Though the relatively weak close does not necessarily bode well for Mondays, the indicators are looking more positive. Let's take a look. The weekly chart of the SPY shows we're still bumping into this yearly R1 level here, which is at 541.98. 695.52, is the R2 for the year. And if you switch this down to a daily chart, gives a little different perspective. I don't need quite as much data here, so let's see if I can change that. And we should see a different. So you can see that the a wide range and a slightly lower close on the day, has sort of a different candle. The R1 for September 657, and then the R2 at 668. So that's sort of a target zone that I think also corresponds to some of the Stark bands. You look down here, we have the daily AD line flip back to positive. They would turn negative here just as we came down at the start of the month to test the pivot. Slight divergence still. We made a high here, have not made a new high, since the middle of August. That's something to watch, as long as we don't get a break of support, and the support we're watching for, is right across those lows. Even stronger support here for the stocks only. It's way down here. It's not showing as much of a desert, and the strongest, lo and behold, is the NYSE All, which has made a sharp new positive high. So that does favor the upside. This is a measure of the broader market, so that's something you'd like to see. We flip back to the weeklies, still positive above their rising moving averages across the board. So, no problems there. The only, concern might be as the gap is widening between that and the moving average. But you can see that can last for quite a while and does not necessarily say an end to the current rally. In terms of Friday's selling, not too heavy. You can see this the 90% chart, I call it. We had 10.6% of the S&P stocks were higher. The S&P 1500, so you get the boost from the small caps, which overall, were positive for the week. Up the Russell was up 1%, and even the Nasdaq, only 8% here. But we had some pretty good selling here in the week, so that's always, you can't keep going up with just positive numbers. You need to have some profit taking along the way. Looking at the weekly chart of the QQQs, also bumping into yearly R1 resistance. It's been hit by a little more profit taking, as you can see by these weekly candles here. After the early high in August, AD line didn't make a new high there, but as we'll look at the daily, we can tell you what to watch for. It's coming closer to its moving average. More interesting is the relative performance. So it was extended here. We thought that we were going to see a period where growth took a rest. That rest could be over the way this has moved back above its moving average. Looking at the daily chart, you can see there's this wall of resistance here at the August high here. Just below the R1 at 585 and change. So pivot, we dropped below it, gapped lower, but it was good that we were able to the next day close back above it. So that's still positive. You can see after the monthly R1 we have the R2 at 600. That would catch everyone by surprise. Daily AD line, it broke this support here, so that's never a good sign. Once this happens, you say, okay, well, it's got to recover. So recovery back above the moving average, moves above this downtrend. That would be a sign that all this period here is a consolidation or a pause in the uptrend. Roughly from 685, down to 553. So that's roughly 32 points wide. So that means that the potential breakout would take you above 600. Daily RS also has turned the corner. So, you want to see the moving averages flat. You want to watch the daily moving averages to be sure they do indeed turn higher. The VIX and VXN popped again last week, but then closed lower, 1844 and 1518 for the VIX. Let's to see where the key levels to watch are. So I'll just take this down. Instead of 10 months of data, we'll drop it down to 6, update it. 6 wasn't really enough. Let's go down to 4. Okay, so we get some amplitude here, and you can see, if you connect some of these peaks, which is what I do, typically, is to say, okay, well, here's the level of resistance here, and just below 20, okay, and so and then this high, which looks like to be about 21. So if we move back above the moving average, we get above this peak, then we're looking at that peak. If we get above that resistance, it's a negative sign for stocks. So for the NASDAQ 100, similar sort of idea. The level here looks to be around 22, and so no strong warnings yet, but something to be on the lookout for. New high, new low analysis. 201 on the NASDAQ composite on Friday. 17 new lows, so that's strong. We're, if we get some more buying next week, which is looking more likely, we should be able to take out that prior peak. If you look at the NASDAQ composite, you see a similar, still having lower highs here, around 309. So you'd like us to see it get above that, I think it was about 370 and 400 level. No worries yet from the, number of stocks making new lows. 250 I think was about this last peak here. So that's the level to watch. The growth value ratio has turned up with the end of the week. Could be a retest of the breakout level. The MACDs, the momentum is slowed, so they'll need a strong close higher to sort of reverse this, but nothing, you don't see any sort of signs like you do when you forming a major top. You can see back up here in 21, prior to the slide in 22 in growth stocks, you saw, sharply lower highs in the histogram. That was a warning sign. and on the other side, the higher lows here going into 23 were one of the reasons I was one of the few that was bullish on growth stocks in 2023, which turned out obviously to be the right idea. Found a feature on stock charts many of you are hopefully using already. If you hit this full market summary, you get this nice combination, and the distance from the 20 EMA, which many of you know I will find quite useful. So the Russell 2.8%, microcaps 2.6, S&P 600 2.3, 2.2 in the mid cap. I don't pay a lot of attention to the value line. Nasdaq's percent, Russell 3,000 a percent. You get down into the Russell 100, about the same. S&P 100 here, and the Nasdaq and the NYSE Composite, less than 1%. So what does that mean? It says, it's not any roaring, sign of that we're overextended on the upside. It allows for easily for, half to a 1% pullback in the day, because that will bring you back to their 20-period moving averages. So interesting. We'll be playing around with it some more. I'm sure it's been there for a while. I just didn't notice it before. So also got some other stuff in terms of how far above the 50-day, the 200-day, etc. And so interesting stuff. I think when I work with students, I tell them to warn their significant other that once they drop into the abyss of learning stock charts, it could keep you going for quite some time. Let's look at some of the sector analysis. Still a high percentage, 90.1 above the quarterly pivots. You can see that there was IPO flashed a daily buy on Friday, and the cloud flashed a negative weekly, but still strong. 90%, 80% on daily. Value, took sort of a hit late on in the week, so you can see that accounts for all these reds in here. XLE, XLF, etc., VGT, etc. So 54% are positive daily. Just no signs of a change in the trend. From short ETFs, which you should not be in, and long ETFs, which you should be in. So, what you're going to look for here is we start to get some daily DTS, or we'll write down the hourly. That what normally happens. I may try to put together a monograph showing you exactly how that changed in February, and then conversely, how it changed back in April as the market bottomed out. In the sector report, I sort that by the 3 DTS signals. So you can see this is the depth of the report for user subscribers. Will get a and has a stock combination of stocks and of ETFs. So you can see there were weekly new buys in Broadcom, AVGO, and in GIS, and there was a new weekly in Freeport-McMoRan, obviously with copper prices and with gold prices, and also a negative on Netflix. So if you move down into the table, you see some of the real nuts and bolts here. So that's a different mix. You can see energy went down to 66.7. I'll show you the table in a set. So this is an interesting juncture. We have some daily so the charts to me look, if you can get you get a bounce on early in the week, then you're looking like you broke this downtrend and you're going to turn higher. Materials look like they're still fighting the downtrend. Okay, industrials, as we're stopped out of our remaining longs, and I think we took about a 10% profit, so wasn't great, but wasn't bad. Consumer discretionary had a good week. You can see this is what you like to see. So, moved above, pulled back to its moving average. That suggests a positive turn. So, auto parts, and most of the red here is in different Amazon, Texas Instruments, or Target rather, and Tesla's still green, Nike's red, as is McDonald's. So there's some room for improvement in the consumer discretionary. Staples, still, 33. That's what, you look for this sort of bounce here. I think I mentioned that it looked like a failing rally. Healthcare is starting to look a little more interesting. It's just holding, so a strong close in healthcare. Pfizer just gave a 4-hour, and Bristol Myers gave a 1-hour. So, the daily, we start to see some more green in those stocks. That will provide some more input on what you should be looking at. So, financials still in 90%, but, a lot of red here. So, it's got people confused, and I'm not alone, but some of the banks do look pretty attractive in here, and of course theoretically, the change in rate structure, should be helpful. Not so much for technology. Confirmed downtrend there, so typically that means we got some time, where technology may be under pressure. You can see Apple, leading across the board. Of course, it's a Viper hot stocks position, but Oracle into it, lots of red there. Communications, of course, rocketing to the upside thanks to Alphabet, and it's just screaming ahead. Utilities, 25, and real estate 50%. So nothing interesting from the RS on that point. So these are the current holdings in the Viper ETF report. We've recently added positions in XLV and XOP. XOP has gotten back down to support, so we added our second buy level, so I'll be watching it next week. Had some, you can see XLP right here, it's pulling down, so this is kind of a quick run through I looked at during the day. A couple of Starling, of course, gold is just, accelerated to the upside, so, if you click on these, they will go to your default, sending in stock charts, or at least that's the theory, but maybe we need to do the live one here first. Let's see. Yeah, that's better. Okay, so gold. You can see we broke out of this trading range here. So, this is more likely the start, not the finish. Tough to add to in here, so you start looking in the 322. Doubt you'll get back to this 317 horizontal support. Pretty much daily indicators, this looks strong, so that does not say you should be exiting. How about XLC? Of course, it's accelerated the upside, already hit the R1, exceeded the R1, R2, at 116. Look at the RS is accelerating to the upside. That's also a good sign. You always look at the, ones that are not looking as strong. You want to, because those are the ones that you need to protect and manage. So we're still holding a partial long in QQQ. I'm getting a little more favorably disposed to that, but not really to jump in back into the TQQQ. XLY is acting well. It moved above the August highs. EAF, sort of a ITB has really accelerated the upside. So it's, probably next target for it's from the 120 to 122 range. It's been a good ride. We kept watching for a move above the quarterly pivot, or the yearly pivot rather, here at 108.72. So that's decisively been met. So the R1 on a yearly basis, 122. And you look at XLK, that's one of the, is it going to break down further, or is this all the correction? So far it's holding up pretty well. You can see all these 355, 78, 84, and 28. So, we got to get above 267.11 here, to signal that we're back on the upside. Very heavy volume here with a slightly higher close, so that'll make the morning opening quite interesting. If you'd like to understand and follow how we made these recommendations or established these positions, you can go to the Viper report and click on the link for the Viper ETF report. I posted on X a week or two ago what the intraday comments look like, which we do, on days like last week. For example, we had sharp market pullback. I didn't think that was a reason to change your strategy, but it's always nice to get somebody else's opinion, and I think that's a facet of the publication that I don't talk about too much. Well, next week, what do we have here on the economic calendar? We got really bombed last week, so consumer credit, NFP, get the producer and the core core PPI, and then the CPI on Thursday. So, Thursday we'll see how we do into that, and in the following week, of course, we get retail sales and we get the FOMC meeting, and that's and the press conference. So that's what we have. Look ahead. If you're 60 to 70% invested, I think that's about right. I think healthcare looks the most promising, for late in the year and early next year. So that's about the only where I would add at this stage in time. Thank you very much for tuning in. And as always, send me your feedback. It's always appreciated.